Well, it's Wednesday, it's the 26th, and the main data of the day is just coming across the platforms here. Let me just check what's going on. Let me have a quick refresh of my trading platform here. Let's have a look. Might be a quick one here. Obviously, we got GDP today. We've got growth at 2.9%, annual rate 2.6%. So Q4 has come in at 2.9%, annualized at 2.6%, which I think was yes, that was on target. The quarterly is beat at 2.9% compared to 2.6. The advance is coming in at 3.5%, which is a big hike. Durable goods are better as well. Unemployment claims are even lower again. Let me just show you all. Let me just share the data with you here. So let me just share that with you now. Let me just stop sharing my screen. Share my screen. Share the tablet. Share the calendar. Okay. So if I just minimize myself, you can see the calendar there. So say good afternoon, everyone. So data has just dropped today. We've got a move in the dollar, undoubtedly. We'll come to the charts in a minute, but let's go through it all. So durable goods, 6.3%, minus 2% for the core. Core PCE, 3.9%, a big miss from the 5.3% and the 4.7% last time. GDP quarterly coming at 3.6. I think I saw it says 3.5 here, but I think I saw 3.6% as the headline. And the annualized number has come in at 2.9, much better than the 2.6 that was expected. So a strong set of data here for the US economy. Jobs claims also showing a really, really tight setup here at 186,000. So a good data done. Let's have a look what the charts are doing. If I just get rid of that for a moment, get the charts back. If I get my charts back, there we are. So this is the euro. If we go down to the 5-minute chart, you see what a massive move we've had. Strong dollar on that number that's come in. So euros rejected 109 early today. Let me just there's no show us RS because it's 5 minutes. Yeah, because it is. Rejected one. This is the 109 line here, the big thick white line here. So we're down 108.75. So quite a big move down. That's sterling. Dollar index itself 103.75. So off the got the daily. That's the daily. So we'll go to the intraday. There's the low of today here at 101.27. Again, pushing lower generally. It's trending low, as you can see on this 1 hour chart. As it's been going lower all week. Good afternoon, ukulele. Is that you that says ukulele? No, Unclem. Good afternoon. Anything you want to talk about, friend? Let me know. Okay. Looking to sell what, my friend? Dollars rallied on this on the data. As I say, the data was better than expected. I can't. I've lost my. There it is. You can't see that though, can you? You can't see that. I can. There we go. So core has come in 3.9%. The PCE, that's the one we're looking at. GDP is coming better than expected, 2.9% compared to 2.6% for an annualized basis. Down from last year, third quarter, 3.2%, but it's still better than expected. And the GDP on a quarterly basis, 3.7%, so 3.9%. Claims also better than expected, 186,000. So again, tight jobs market. That might, push the Hawks a wee bit more. Still looking like 25 basis points from the Fed next week. But we'll see. The CAD yesterday, the Canadian, the Bank of Canada, talking about. Just put that in there. You see that little right here. Talking about. looking to now reassess what's going on. But dollar index is up and it's come back down here initially. Euro, big spike down on the initial numbers. It's the 5-minute chart again here pushing lower. The yen also dollar higher, trying to get to 130. Let's put 130 in there for you so we can see there's 130 or just around about 130. 130 is just about there, 99.33, give it a take. So having to go at 130, top of that channel again for dollar yen. Kimwell, lose dollar. I don't know what that means. What do you mean? What do you want to look at, Kimwell? Dollar up on the data, basically. That's the yen. Sterling back to 124 level, just up here. I've got white charts on today, guys. So do you prefer these charts to the black background? Let me know. We'll do what you like. So 124. Sterling's been playing with that all day. It's rolled through that now. We spiked to 123.60 lows here. The 50-hour moving average sort of came into play. We're out with the Bollinger Band. Bollinger Bands have compressed now, having had a big rally up yesterday, and we're currently going sideways. Yeah, it's strong, Beretta. Certainly, data says dollar strong. Well, that is overall. It's you know, roll all that data together. That is a dollar stretch, dollar positive. Interestingly, the CAD here, dollar CAD, has actually moved down today from the big hike we had yesterday over 134, following the dovish outlook from the. In fact, it was significantly over 134, wasn't it? 134 was about there. It's just there. There it was. There's 134. So that dovish height, they went 25 basis points, the Bank of Canada. So we rallied yesterday to 134.45, but we gave it most of it back up, and we're back below where we were before the hour of the Bank of Canada yesterday. So Fed's next in line for this pair. Dollar CAD 133 and falling. Amina, good afternoon. Long time no see, my friend. Hope you're well. Mutsimi saying, as a newbie, I need more live chats. Thank you. Well, that's what we're here for, my friend. We do it at least twice a week. If we want to do it every day, we can do. That's what we're looking to do. Unfortunately, there's no Facebook connection today, so everybody's over on YouTube. So we certainly do that if that's what you'd like us to do more rather than write stuff. So 134 is given up. Dollar CAD, and we're down. So any particular assets, guys? Let's have a look at gold. Gold's had a right old rally recently. There's gold through the top here. There's that 149 level we got to this morning. We couldn't quite get to 150, but gold remains bid. If you look at the daily chart, strong bid here. It's been in the upper half of the Bollinger Band there. A great example of trade what you see, not what you think. Big rally triggered here all the way back at the beginning of November, and gold's being bullish for November, December, and more so in January. See how the level is steepening. Is this going to continue? Who knows? But the trend is very much with you. Some big positions being added. 1850, 1900. See these key levels here: 1900 breached, and 1950. The next psychologically big round numbers. Next round number. For gold, so gold continues to be bid. What are the other indicators saying? Percentage R, into the oversold area. MACD's flattening out the signal line. RSI on the 14-day countback is also in the oversold area, the overbought area, I should say, not oversold. But the trend keeps going. 1950, the next line in the sand for gold. Right, first person to ask is Amina. Hello, Amina. Aussie dollar today. Let's have a look. We were again another one here. This is the 1 hour chart for the Aussie dollar. Remains bid. The inflation data this week pushed. The RBA have got a decision on the 7th of February, and there was lots of 15 basis points or 14 basis points actually. From the RBA was pricing. Sounds like an odd number, but that it just rounds up the interest rates there. But that 70.50 level, which was a resistance from last week, the 18th of January, when we fell back to 68.80, and we just rallied since then. Again, another one that's been in the upper half of the Bollinger Band predominantly, not always. Obviously, we sunk down here to the outside of the Bollinger Band, but again, you can see this, when the Bollinger Band squeeze like this, when the top comes in, the bottom comes up, they've got this Bollinger Band squeeze, there's some action going on. We went down quite aggressively, but then it reacted really aggressively on the news on that 1 hour time frame earlier this week. So Aussie's bounced up through the 70.50 level, and then it's legged up again yesterday. We rallied to test 71.20, yesterday's high. So if I zoom this up, you can see, so yesterday's high up here of 71.20 has been tested, not just the once like we did yesterday before we descended, but multiple times today. So 71.20 is today's key resistance, which we're sort of, here it is, 71.25 in fact, but 71.20 here. I mean, that's the level you want that to break up on this data. We started to move down, so but it hasn't. Interestingly, it hasn't. So the Aussie's still holding. The dollar's sort of immediate reaction has gone. The immediate rally in the dollar. If we go to the 5 minute on the data, so it was a big move down for Aussie dollar on the data, but that's sort of disappeared. So it's still relative. Again, depending on the time frame you're trading it, Amina, but on this 1 hour candles, obviously there's a big wick on here as the data's come out and perhaps shocked the market. But it looks like it's stalling at 71.20, so it needs to break over 71.20 to take that higher. But remember, 71.20 was yesterday's high as well. Yesterday's low was back down here below, out of this Bollinger Band at the moment, below the 50-hour moving average, and down here. That was yesterday's low down here. But as you can see, Tuesday's low was even lower, and Monday's low was even lower. So the highs are getting higher, the lows are getting higher. So the trend continues here on this 1 hour chart for Aussie dollar. So 71.20 is the break to the upside. Immediate support at the moment is the 20-hour moving average at 71.010. Oh, sorry, 71.10, say there. If we can zoom that up a bit. Yeah, there we are, 71.10. So we're testing that now. But really, that channel we've been in all day, 71.0, so 71 itself basically is the excuse me. I had too much tuna at lunchtime, so excuse me. You know what it's like when you have too much tuna. Where's my sorry, my object list on down. Put that 71 in neatly. There we are, 71. There we are, 71. So there's that 71. That's the support. 20 pips above that is resistance. So far down, we're bouncing between that. So you want to trade this intraday, down at the 5 minute chart, we'll have bounced off those quite nice up and down. There we go, all the way down here. Didn't actually get all the way down. So the shorter time frame is the 5 minute 200 period moving average. So there's the top, there's the bottom, there's the top, there's the bottom. So we're bouncing around between that on a 5 minute chart. But on an hourly chart, we're still sort of bid, although it's running out of steam. See how that goes. Depending on your time frame, Amina, but it's relatively well bid, the Aussie against the dollar, even though that was dollar positive data. So there we go. Next up, free research. I love you guys. So that's no problems. What here for? Gerald's asking about the Nasdaq. Let's have a look at Nasdaq. So USA 100. Obviously, these are the futures prices. This is the USA 100 on the spot. So we're at 11,935. And again, another one that's relatively well bid. This week, again, our highs have been getting higher. So from down here on Monday, Tuesday, Wednesday, Thursday, our lows are getting higher as well. So even this bottom down here under, this was last week, we went down here to 10,700. We've bounced off that. We've rallied up, moved down into the 200 period moving average on the, this is the this is a 4 hour chart. Supported, 50 period supported. It's a bit messy, to be honest, but the 200 is flat, the 50 is sort of inclining, and the 20 is certainly inclining. So we're we're moving up. So 11,923. Stocks will probably be big from that positive news. Jobs really, really tight again. So Nasdaq continues to move up. If we come down the time frames, there's the more volatile 1 hour chart. As you can see, hopefully you can see, we're above where we were earlier in the week. So there we go. It's interesting. It's a strong pre-market at the moment. 11,900 needs to break and hold. So that was Monday. It's Tuesday, Wednesday. We shook out, but we went down. There you go. Bottom of the Bollinger Band, down, now into the 200-hour. Bounced off that, went positive later on yesterday. It was a strange old day yesterday. Opened very, very negatively. Recovered to flat for the day. Recovered the 50-hour moving average into the end of day. Now we've rallied off that today. Can we break? This is the key level where we are now. We've had 1 hour over this 11,900 level, and it's trying to push higher at the moment as well. So Nasdaq moving up as well. Again, Gerald, I don't know what time frame you're trading this, but it's again, if I go back to the 1 hour and look at the longer term this week, we've rallied from these lows down here. From last week, these lows down here, 11,100, and it's continued to move up. Signal line is positive here, so you can see the signal line on the MACD. RSI, this is 14 period RSI, also positive here yesterday and today. So it's followed through from yesterday. We're touching the overbought area at 70 here. So let's see if we can break this 11,900 level to take that higher. Good mind, no problem. Isaac, can I get a soft copy from you guys? I've attended 4 classes without knowing what's going on. Help me on that, Isaac. Do you mean when you say you've attended the 4 classes, do you mean the online webinars we're running in Africa, or do you mean you've come into the office, one of our classes? Where are you, Isaac? You certainly should be. I don't know what you mean by soft copy. Do you mean a copy of the webinars, a copy of the software? Isaac, contact support at hfm.com. Support at hfm.com, and they'll be able to help you out, or come into one of our offices, depending where you are in the world. Hope that's answered your question. If not, Isaac, just stick another question and I'll get back to you in a minute. Gold last going up to 2,100, says Mohammed. Well, it's bid. It's certainly bid. There's no sign of it stalling. Look at that. Look at those candles. That's the daily chart for the gold market. It's been in the upper half of the Bollinger Band, Mohammed. It's above its 20-day moving average, having lots of sideways action here, and really descending in October and September. If we zoom that, zoom that in a bit. Sort of down to these lows in October, which took us down here at this 1640, 1650 level. Huge day here. The blue line. Hope you can see that blue line here at the beginning of November, and it really hasn't looked back since then. And that was, when we were talking about inflation, the Fed going hard and for longer, high for longer. Remember at the beginning of November, and it just hasn't looked back, has it? And again, depending on how close zoomed in you are. Risk factor. Well, the percentage R has been. Here for all of January, it's been in an oversold, sort of overbought condition. RSI is also over. Well, it's 69 now. It's out of the overbought condition, but it's too early to tell. And the signal line on the MACD is sort of flattening out as well. It's in line with the histograms. It's come in. Histogram has come in under the signal line now, but it's still positive. There's no panic to get out of that. If you've added to this position as it's rallied up, you can start taking some profit off the table. But 1950 is the next line in the sand, Mohammed, and certainly 2100, although looks very, very ambitious on this daily chart. If we look at the weekly chart, 2100 sort of comes into play, doesn't it? 2050 was that spike nearly a year ago when the Russians invaded Ukraine. We had this panic back to the 2000 level. So 1950, 2000 is a huge number. 2100, it's going to be a while before it gets there. But if you're a patient trader, I don't know how you're holding this, Mohammed, but that is certainly big. Look at this. This is weekly trades. weekly candles. So for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. We're into the 13th week. And of those 13 weeks from the floor down back here in October, only 2 of those weeks have been negative weeks. And look how small the candles were when it was down. Small bodied candle, proper doji candle there. Here, this one here. But as you can see, it didn't move a lot that week as for an end of week trader, but it broke that key 50-week moving average, the 200-day moving average here. And it's rallied. And what a strong January it's had thus far as well. Certainly ran out of steam. Not ran out of steam, but sort of slowed down last week, and it's slowing down this week. But it's still, the body looks bigger than it did last week. So, don't panic. That still looks like that's still, technically that is still bid. 1950 needs to be beaten to the upside, Mohammed, my friend. Super up dollar. Well, the data was positive. You would read the data was positive, so you'd expect this euro to have crashed. But this is the 5-minute chart on the euro, Mohammed, and it initially spiked down, but it's rallied now. Clearly, the data isn't enough for the market. Well, at the moment, for the market to think it's going to push the Fed off its course. Remember, they meet next Tuesday. They are announced Tuesday and Wednesday. Their announcement is next Wednesday, the 1st of February. So we're back over 109 for the euro, 109.7. So it's turned around in the last few minutes. There's the 15-minute chart. There's the 1-hour chart. See, it's still, even this with a few 8 minutes to go, we had a big spike down, but that's at the moment, that's still 8 minutes to go, but that's a positive up candle, isn't it, for the euro? Still under its 20-hour moving average at 109.12. But interesting, that was a big data. Don't seem to be quite positive with the dollar, and it's not happened. That's what happens, my friend. Bacaloo, hello, my friend. Bacaloo TV, like that. Gerald, thank you so much. I appreciate it. No problem. Bondface. Why don't you give signals based on news? We're not a signal service. News, trading the news can be really difficult, or is really difficult. If you want to, there's a lot. Go to our website. There's a few webinars on how to trade the news, how to fade the news. It's really, quite often it's what's priced in. The actual data. Let me share the data again. Let me share them. Data again. There we go. The data was sort of dollar positive when you just look at the overall data that's come across there. Durable goods, big leap up in durable goods. The gross domestic product, the PCE 3.5%, so it's higher than expected. It was expected to come down, so it's pushed. That's the key one. Remember, PCE, the price index, is what the Fed look at. 3.9% here for expenditures, 3.2% quarter on quarter. Let's look at the expenditures figure. The jobless claims, really tight market again, less than 2. It's significantly less than expected. 20,000 less than expected. That's a significant, tight market. 186,000, and GDP much stronger than expected. 2.9%. The big headlines, which everybody's tweeting about, no doubt, and getting overexcited about. But overall, that's good US data. So that suggests that the Fed may have gone as far as they need to go. We're not going to get to 5% a terminal rate. Might come lower than that, and they may be following the Canadian example. But it's too early to tell. And it's unlikely to put them off hiking again 25 basis points next week. But who knows? Nobody really knows until the announcement's made. So that's what happens with data. So don't get too hung up on signals and actually trading the news, because the volatility can really take you out of the market. Bond phase. So be careful with that. If you want to trade the news, have a look elsewhere, my friend. Joel, hello, my friend. Anything you want to talk about? Let me know. I'm new to trading. Do you have any advice for me to trade tomorrow, Sahir? Sahir, if you're literally new to trading, you don't trade because it's Friday, or trade because it's Thursday, or trade because it's 10 o'clock on Friday. Trade with it, have a strategy, have a system, but principally understand yourself first and foremost. I did a webinar yesterday on risk management, and money management and psychology of trade. And they're the three real big things that we need to understand. Some very simple numbers, again, in simple terms, risk less and you stay in business more. Risk too much and you blow your account very, very quickly when you trade CFDs and Forex and other things with CFD brokers. So have a look at that. So as far as the data is concerned tomorrow, that's going to move the market. There's the core PCE which is what the core PCE price index is, the key data tomorrow, and that's really what the Fed look to as far as their inflation is concerned, not really the CPI. So look for core PCE tomorrow. This time tomorrow could really move the dollar. But as we've just seen, Safia, if you were this is 5 minutes. So this is what's happened when the data's come out. It's been drifting lower, this pair, and it went all the way down here. So if you were still short, that was fine, But if you then got caught the wrong side of that, it would have taken you out. But if you've been trading this late here, your stop loss would probably been around about here. So you've been short, so you wouldn't have lost that much. But now it's gone long. It's back into the upper half of the Bollinger Band. It's over the 50 period and it's rallying high. The next resistance is that 200 hour there at 109.11, as we hold 109. So it's moving higher now on this particular time frame. Okay, but really, trading is very much a psychological event, a psychological sport. So get yourself in the right frame of mind first before you start trading. And this is the 1 hour on the euro. Okay, Isaac saying, may I have that website? So it's our website, my friend. Again, let me show you it again. It's our where's it gone? Lost it again. There it is. This is our website. So this is hfm.com. That's our main website. Oh, okay, hfm.com. Let's go back to the. So this is our main website, hfm.com. Okay, these are all the different things you can do: accounts, platforms, tools. This is what we're talking about today. Oh, actually, we're doing education. We're doing live webinars. So we've got videos, we've got ebooks, we've got e-courses, webinars that you can register for, live events like today, podcasts to listen to, all sorts of things going on. The thing I was looking at was this: the economic calendar, one of the major tools we've got. Okay, another nice one here. So if you're new, is TraderSpot. I like TraderSpot. It's simple. It's clear. This is basically what the 8 major currencies are doing relative to one another. So is it strong or is it weak? So as you can see here today, since this is in the last minute, but since midnight today, so the trading day today, clearly the yen is down on the day. The euro's a bit mixed. Dollar's down now, a bit mixed. So it changes obviously every minute. But overall, it's been a good day for the Canadian dollar. It's been a good day for the Swiss franc at the moment. It's been a bad day for the yen. So, many people are obviously trading the CAD yen pair or the Swiss franc against the Japanese yen. And that's the balance, because you've got a strong currencies and weak currencies, and that's what you want to be looking for. So if you just come in today, these things are quite good. These client positions, you need to treat these with a bit of a pinch of salt. These are aggregated positions from FX Street, one of the main aggregators of news. So take what position. So most people are here, according to 71% of people are short euro dollar, 69% are long dollar for Swiss. So and 83% along the Aussie dollar against the US dollar. But again, as I say, treat all these things with a wee pinch of salt. So if I just get my charts back, there we go. So that's the website, Isaac, hfm.com. Mohammed, thank you, no problem, my friend. That's what I'm here for. Right, we've got some more requests. Gerald, dollar yen. Again, I don't know what time frame. Gerald, did you mention the time frame before? I think you did. No. So dollar yen at the moment. This is the hourly chart for dollar yen. We went to 131 this week, couldn't hold it, turned around immediately, and we've been sort of edging lower ever since. So basically, the dollar's weakening, the yen's strengthening. What happened this morning was there was technically, obviously, it ran into this 200 hour and just didn't want to break through it. So 1, 2, 3, 4, 5, 6, 7 hours. It was banging into, all through the Asian session, it was banging into this 200 hour moving average. Didn't want to break it. Just can't go down. It was edging up, wasn't it, at the end of each hour? It was edging up slightly. We got to the European session and the yen lifted here at 9 o'clock. That's 9 o'clock server time, so that's 7 o'clock in London. That's the brokers and traders are getting in. And then we lifted significantly again. So it's broken into the upper half of the Bollinger Band. But this time, during the UK and London session, it hasn't been able to break over the 50-hour moving average. So these moving averages are out of alignment. Okay, so that's always a heads up because we've got the 50 above the 20 and also above the 200. These should be the other way around. They should be in alignment, so it's not clear what's going on here on an intraday basis. It's sort of drifting sideways. So it's gone up and it's gone down. But if we look at the daily time frame, we can see that clearly dollar yen is in a big downtrend from this spike here to that heady 150 in the middle of October, and we've just been moving down since. So we broke, the big down day was there on the 10th of November where we broke under the 50-day moving average. We were already in the under half of the Bollinger Band, and we've just moved down ever since. So bounced off 138.50, leg down again here as we started December. Big leg down again here as we went under the 200-day moving average. Big negative day on the 20th of December. Sideways into the end of the year. Bit of a retrace beginning of, and then we've gone down. So the 20-day moving average, the top half of the Bollinger Band, the middle line of the Bollinger Band, has kept us the right side of this short trade. And again, just this week, we rallied to 131 and rejected it on Tuesday. We were down again yesterday and we bounced a wee bit today, but January low is currently 127.14. On an end of day basis, it's 127.70. That's the zone bears we'll be looking at. MACD histogram's flat, trending lower though. Signal line flat. RSI 42 really not doing anything at all, not trending, but it's bouncing off this over so could go either way. But to take this higher, take dollar yen higher on an end of day basis, Gerald, it needs to break over the 20-day moving average. It needs to get into this upper half of the Bollinger Band, which currently sits at 130.40. So that's the resistance. Support is all the way down here at 127.70. So this is still angled lower. If we go to the 4 hour, it's a bit more messy from a trending point of view. It's bounced off this 27.75 up and then down again today. It's bounced off the bottom of the Bollinger and the 50-hour moving average. So again, the 4 hour candles need to break over 130 to take it to the north, and it needs to break under 129, really 129.20, 129.20, and the bottom here at 129.10 that's the support on the 4 hour time frame. So that's the 4 hour time frame. The 1 hour time frame there, it's running to the 50 hour, so it needs to break and hold over this, like it looked like it was going to, but we'd had 5 hours up this morning, hadn't we, at 12 o'clock, and now it's rolled back down. So it needs to break 129.88 on an end of hour basis. Candle needs to close above that if it's going to move higher. Today's spike on the US data is unlikely to get touched there at 130.29 the way things are going, but we'll see as the US market opens in about 25 minutes. Okay. Gerald's asking about 30 minutes. So that's the 1 hour. So we're going to get, let's get to 30 minutes. So the 30 minute then has got resistance like the 1 hour had at the 50 period here at 129.88 or 129, yeah, 88. The 50, you say 15 minute? Yeah, 30 minutes, sorry, 30 minute. The 30 minute has got the 200 period moving average holding resistance. So resistance, there's the big round 130 level. Let me just put that in for you. That's the wrong one. Okay. Let's make that 130 and make it big. So that's the big round 130.00. Let's make that a thicker line so you can see it. So there's the 130 line above our 200 period moving average here. The 200 period moving average here. So that's the resistance. Couldn't get to 130. So that's looking like that's wants to move down. However, we can't say that because we're really consolidating here on this 30-minute time frame. But the immediate support for you as a trader today is that 129.64.5. 129.64.5. That's the floor from this move up that we've had. So that's where people are buying at the moment, and they're selling around about the 200 period moving average. So resistance is also there, 129.95, and it's right in the middle at the moment, 129.75, isn't it? So that's your range, and you'd be looking to either buy it down here, sell it up here, or if it breaks either of these, go with the flow in the direction it is. Overall, it's biased to the upside, isn't it? Because it's in the upper half of the Bollinger Band, but it's done that, broken out, and then it's consolidated. So look what the Bollinger Bands are doing currently. They're starting to pinch in. So we could have some movement, but that's probably a reaction to this. The signal line here on the MACD on the 30 minutes rolled over, so it's topped out. So it's looking like it's running out of energy. And so we just might start to just consolidate in this channel. So patience, wait if you're trading it on the 15-minute time frame. My friend, the 30 minutes. Did you say 30 minute or 15 minute? 30 minute, you said, haven't you? 30 minute, Gerald, sorry. So yeah, there's that consolidation for the rally up. The news hasn't really taken it high. It didn't close. So yeah, it's not really doing very much at the moment. It's going sideways. So stay out. If in doubt, stay out, as they say. So there we go. Michael's asking about cable. So look. What's going on with cable today? Let's zoom in a bit. We rallied to the 124 level. Let me just put that object list. Make that a bit thicker as well, so we can see it on the charts. 124. By the way, those of you that come here regularly, do you prefer these white charts to the white background charts to the black background charts? What's your call? And let me know, and we'll start to use one or the other. I just always default to the black ones. That's all. It's easier on my eye. The white is a bit glary for me here, but if you want the white background, we'll keep the white background. So Michael's asked about sterling. Well, again, it's another one that's sort of stalled around a big key number. See that? We're just literally being rotating either a little bit above or a little bit below the 124 level. So overall, though, if we go to the daily, that still remains bid. So the daily time frame is still positive. We're way above the midline of the Bollinger Band. The major resistance for cable sits there at 122.07. So 122 is the big support. 200 pips away from where we are at the moment, and the 50 period is 121.35. But again, it's out of sync. No, it's not. It's in sync. What am I talking about? We've been rallying quite nicely again from these lows in September for the sterling, when we had the hideous government in for a few days, and sterling fell at 105, 104, and we've rallied and recovered from then. The key level where the 200-day sits is around big 120, big huge psychological number. Above that is the next big psychological line in the sand, which is 125. The rally in December December, petered out as we got to 124 and then declined into the key 120. It's recovered from 124 January. So will we have an attempt on 125 for cable before the end of the month? Doesn't look like it, does it? But who knows? 124 hasn't yet been broken and held on an end of day basis. So cable, Michael, is biased to the upside on the daily. The 4 hour is still strong. Again, you can see that 124 resistance there on the 4 hour more. And the 1 hour intraday, I don't know what time you trade, I don't know what time frame you're trading this, Michael. But certainly 124 recomes down. Osama's saying white. Gerald is also saying white. So let's keep with the whites certainly from me. Andrew's not in today, so I'll let her know next time we go live for the white background. Yes, so it's big, but today it's just gone sideways. It's very messy as a trend following trader today. Bias to the upside. The last big break was yesterday as the Bank of Canada moved things forward. So over the 20 hour into the up half of the Bollinger Band through the 50 period and rallied to 124. And then it doesn't know what to do now. Remember, the Bank of England are also got some announcements next week as well. It's a big week next week, as well as the Fed. Bank of England, obviously lots of earnings. Nobody's asked about stocks here today. Lots of stocks moving very aggressively. Tesla, I don't know if any of you are Tesla fans or big earnings beat yesterday, and they're up 7% last time I looked pre-market, and the market is still the cash market still 20 minutes away at the moment. Yeah, some good data there from the US. So there we go. Where were we? Sterling. So sterling sideways today. 4 hour is still biased to the upside because we're in the up half of the Bollinger Band, but again needs to break away from 124. It's going to move higher. Needs to break under that 50 period moving average at 123.36. It's going to move lower. The daily, thank you very much. Still trending higher, but again, we'd like to see a break of 124 on an end of day basis, and then see perhaps a rally to that, try and test the 125 and say, well, that's going to happen before the end of the month. One would question that. It's Thursday and it's only a couple of days, but you never know. 125, some areas for the upsides might be some cashing in because we've had a good January for cable into the upside. Rose is asking pound Aussie. Certainly, Rose. Have I got pound Aussie here? Got pound Kiwi. I have to open it up. Have I not got it? Pound CAD. It's just as easy sometimes. I've had it. No, just easy to open it up. So. That's my. These are all just. Wait a minute. What was it? Pound. So let me just put this same template. Sorry about arrows. Because it's got live 22. So that's short, Rose, and anybody else that's trading that. That's the 1 hour chart for the pound against the Australian dollar for this week and last week. And it's been in the under half of this Bollinger Band, second under half of the Bollinger Band. Went all the way down here just yesterday, in fact, didn't we? Through here, 173.15. It's rallied yesterday, but it can't break the top half. It can't break out of the Bollinger Band. It certainly now can't break the 50-hour moving average. So that's your resistance today. It's biased lower against it. It's banging into it, bang, bang, bang. Interestingly, the Bollinger Bands have narrowed quite substantially as the size of the as the volatility's cooled and the size of the candles cooled. Remember, yesterday it's Australia Day, so Australian markets were closed yesterday, and lots of people are taking a long weekend, so they Wednesday, Thursday, Friday in Australia. I know that because I know some of my friends and relatives are doing the same thing, but so it's relatively quiet, having had the big news of the inflation earlier in the week. So this is continuing to decline. 173.15 is the next downside. So we've bounced off that, but we're still edging lower on the expectation that on the 7th of February the RBA will have to act more than the 15 basis points many were priced in for the Aussie. Some doves on the RBA were talking about a no change policy, but the inflation this week was a big surprise, came in at 8.4%, and it's a bit of surprise to many in the market. So that's continuing to trade lower on the 1 hour. I don't know what time frame you're trading it, Rose. Do let me know. So if it's 4 hour, substantially, big downtrend there from earlier in the week. Last week as well, rejecting. See a strong rally over the 200. Break, short, add to your short there, continue to incline, retrace, but continuing to move lower. And interestingly, as you can see, it's broken this low that it was trending from before. So 174.70 from these lows last week has been broken, retraced to, and then we're moving back down again. So again, 4 hour trades take more shorts up here, and that's testing it back to this 173.15 level. That's the 4 hour traders. We saw the daily trend was down, big retrace, but now on the news on Tuesday, we broke again back through the 200-day moving average. The 50s there, the 20s there, so it's out of sync because we've been up, so it's out of sync, but significantly we are below the 200-day moving average. So that's these lows here. It's the end of day, remember, that 73.14 level. We look to the left, and we were last down here all the way back in September. So this has turned quite bearish to the downside for pound Oz, as the Aussie's got a lift on the expected actions from the RBA on the 7th of February to increase interest rates more aggressively than the market was expecting initially. So a lot of volatility there. So moving down, MACD's down, RSI's down to 35. So it's really, this is the daily, remember. So that's the range we're currently under. 74.70, that's that 4 hour support, but there's the 200 day is even more significant up there at 175.50, the 200 day moving average. So certainly that looks a long way here from the 4 hour above the 20 period moving average to take it to that, test that level again, then the 50 and the 200 hour for the 4 hour time frame, and the 1 hour. There's that top of the that 36 coming right in on the top of the Bollinger Band there, 74.70, and there's that 175.50, the 200-day moving average, big fat resistance for the 1 hour trade. So again, it's angling or tapering lower, but we are at these, as I say, this 73.15 was September low, so we're at the bottom end of that, but yeah, it's likely that the RBA will move. Okay, most of you are voting for white. Thank you for that. Gerald says white. Thank you. Why your live support doesn't work, Meshach? It should work. There are people there on the. there might be a problem with it at the moment, but certainly there's lots of them directly below me. Actually, if you go straight down about a meter or two. All the support guys are sat directly below me here, or some, not all of them, but a lot of them are sat below me, so it should be working. It's been weeks now. What do you mean it's been weeks? I'll go and ask about Mashak. Where are you in the world? If you come to the, whoops, didn't mean to do that. If you come to our website and you'll click on live support, it should pop up. Unless there is a problem with it, I didn't know that if there is, but certainly. If you're not getting an answer, send an email in, support@hfm.com, but they are there. And live support, click on the live chat, they should be there. If not, again, send me an email at webinars@hfm.com, and I'll go and, I'll ask anyway, but certainly they are there. How does earnings per share affect the market, please? Right, Samson's asking a bit of a fundamental question. So when companies report their earnings, let me see if I can find our website, hfm.com. Trading to, we've got the economic calendar again. Let me show you it in here. We haven't got them all on here, but this is just an indication of, to answer your question. Samsung, so if I, let me go with the, oh, you can't see that, can you? Hang on a second. Let me just put the calendar back up a minute. Just bear with me a second. So if we go to the main website, so if we go to tools here, sorry, education. Under education, there's we've got a new called the earnings calendar, Samson. Okay, see that on the website. So under education, earnings calendar. So this is the current earnings season, whether you're trading the CFD variety or the physical stock. So next week's a big week. We got Facebook, Meta, Amazon, Apple, Alphabet, Shell, lots of others. Pfizer are also out next week. Exxon next week as well. What you're talking about is earnings per share. This is this bit here, earnings per share estimate. So when analysts are sort of preparing their reports on companies, they look at how the company is performing. Is it selling more? Is it selling yet less? What are the expenses like? And all of that comes out in the earnings per share. So each company has a share price, and that's these numbers you see on the charts going up and down. And the amount of shares available for people to buy and for people to trade are all out there as well. So they divide the price by the number of shares, and that's what their earnings per share is. In America, they're obsessed about reporting or drilling down into sort of the day-to-day performance of a company. So every quarter, the rules in America is that each regulated company, each company on any of the stock markets in America have to report how well they're doing for the previous quarter. So the fourth quarter of 2022 ended obviously at the end of December. And normally it's about 2 weeks after the end of the quarter, the companies start reporting how they're doing. And they all have different days and different times. So just use Exxon as an example. So a huge company, massive market capitalization. They're due to release on the 31st. Sometimes these dates aren't actually cast in stone. Sometimes they do move. BMO means before the market opens in America. The opposite of that is AMC, after the market closes. So typically 11 o'clock server time, the big tech companies are all sort of reporting around same day, a few minutes after one another on Thursday. So Thursday next week's big tech company reporting day. So get back to your question. So the shares available and the share price on the stock market is divided each quarter, and the analysts decide how well the company should do. So the estimated, so what they put out is usually revenue and the EPS. So last quarter, for instance, what we're showing here, the EPS for ExxonMobil in the third quarter of 2020. Sorry, actually, this isn't that. That's the similar quarter, because that's how they compare it, quarter to quarter the previous year. So in 2021, EPS for ExxonMobil, as the stock market was rallying, was only $2.05. It's estimated to be much stronger because the oil prices rallied. They had a very strong 2022, and obviously the oil energy shares did very well. So the EPS, the earnings per share for Exxon, is expected to leap up from this time last year, $2.05 to $3.32. The other key numbers isn't actually on here is how the revenue, how much money the company has generated, usually in billions of dollars, or the sales, or there's all sorts of things as well. You know, if directors have changed, different positions. So, but earnings per share is the key one that analysts look at, and revenue is the other key number they look at to see how well they do. So anything next on the 31st, anything that shows that this is better will be positive for the company. Anything that shows it's worse is technically worse for the company. A good free site, if you're interested in more on, is earnings. Let me just, actually I could do it here, can I? Earnings, not real window, and earnings. Sorry, it's probably doing this live, isn't it? Earnings Whispers, there we are. Earnings Whispers is a good site for the calendar, for what's coming up and what's actually going to report. So that'll be out in a minute, hopefully. No, it's not connected, but no, it's not connected. Anyway, let's get back to the charts. There's lots of people asking about other things. I hope that's answered your question, Samson. Actually, there it is. It's popped up. So this is today. Let's get rid of that. This is today. This is what the ticking means. So these companies have already reported. You can see. So it says before the market open, after market close. Also, the companies that have reported today, Thursday the 26th, there's 88 before the US market opens. I.e., they've got 4 minutes before the market opens. And then after the market closes, 11 o'clock server time tonight, will be another 51 companies. So all these companies have reported. You see the green ones have done better. So let's use American Airlines. So their earnings per share was expected to be $1.14. It's actually coming better at $1.17. And revenue is also better at 13.19 billion, I should say, compared to 12.69. So their growth is 40%, and the surprise factors have done well. So on that data, you would expect American Airlines to shares to open positively. And as you can see, a lot of the companies are beating it. There's some reds as well, but these are relatively MasterCard's a big company. MasterCard has done better than expected. Nokia, once a market leader, but still, again, it's done better than expected. Berkshire Hills is in line. Who missed quite significantly? Big miss Southwest Airlines. When it's in brackets like that, means it's a technical issue. But so yeah, the ones this morning have done very well. Aftermarket today, we got Intel, we got Visa, some big numbers, some big companies reporting again after hours today. You see there's lots of them. 54 Bank Corp, another big finance company reporting later today. So there you go. And let me just share my charts. So that's earnings, Sam. So more on our, if you're going to say more on our webinar. So I hope that answered your question. Some more here. Nukulu. Good evening, sir. Kindly please check CAD yen. How will it be affected by the news? And briefly explain how is the momentum of it going forward. So CAD yen. CAD very closely correlated to the oil market. Oil has been strongish. It's over $80. Lots of banks yesterday were talking about. Oh, it's a black one. Sorry, guys. This is let me change the template. Black background we're using. What do we see? That's this one. Then we're using. Sorry. Well, the banks yesterday were talking about a bid for oil going over $90 a barrel or $80. That's a big significant increase from here. So that's helped CAD today. Yen's been quite weak at Nukulu. I don't know if you were here before, but yen is the weakest of the major currencies today. So we've had where are we here? January. This is the one. I don't know what time frame you're trading, but the daily time frame for this still remains weak. So it's still negative. It's trying to pick up from these lows. Some big days, some big volatile days for CAD yen. Big up day, and that was all wiped out here in the middle of January. It's continuing to move lower. However, last couple of days, we've seemed to have found a floor. But you could argue, well, I will argue, that the lows are continuing to get lower, with maybe a bit of a flattening out here during January, and the highs are also getting lower. So obviously your question is what's happening. Well, at the moment, there's a bit of indecision. We can't really break the 20-day moving average, so the bottom of the Bollinger Band. So the support level, the price of CAD yen on an end of day basis didn't want to break 95.25. See that 95.25? There's those 1, 2, 3, 4, 5, 6 candles sitting right on 95.25. Last week we bounced off that. We were up on Friday, we're up on Monday, but we haven't been able to break over the high on an end of day basis, 97.75. So 97.70 for round number's sake, and 95.25 is the channel we've been in for most of January. Yes, we broke out of it here, but we've come back into it. So at the moment, we want to break above here to go higher, or below here to go lower. The bias is to the upside simply because we've been above the 20 period here. We're above it for another day. We closed above it here on Monday. Tuesday, we were down for the day, but we were still above the 20-day moving average. We come back under it yesterday, and now we're back over it again. So we've retraced, and we're backing up. So a break of 97.73, I'll call it 97.70, was positive. Where would it go if that happens next? Well, the next level, the next resistance is through here, which takes it to 98.65. And then the next resistance, that's that top day for January. That's our high for January. Then the next level takes us here, top of the Bollinger Band at 99.35. And above the intraday highs during January. The intraday highs, if you want to put some more in, sits there at 99.06. So for me, this 97.75 is obviously the first one to break, and then we might, quite quickly get to 98.65 and then 99. So 99 is the next big target to the upside Nakulu. Affected by the news. So that's the daily time. So those blue lines I've put on are key daily targets to the upside. If we go down, you can see there's that target. So it's had a good day. This is a 1 hour time frame. So it's been angling lower yesterday. That's our low of yesterday, which we actually got lower today so far. So interestingly, intraday has been lower today than it was yesterday. But we retraced from that, and that's why I'm saying it's not doing much on an end of day basis. So we need to break this 97.75 on an end of day basis. Here on a 1 hour time frame, it's been right in the middle of the Bollinger Bands. They're not doing very much, but it's finally moved away from the 200 period. It's broken over the 20-hour moving average here this morning at whatever time it was, at 10 o'clock, close of the 8 o'clock candle, 9 o'clock candle, and it's been strong ever since. Rallied to the 50-hour moving average, and then broke that very significantly in the last hour, and this hour is extending it higher as well. So on an intraday basis, it's positive. The signal line's rallying quite strongly. RSI is 72 and into the overbought area, so it may cool here. But if it does break 97.75, it could give it more energy. So there you can see the. So the next thing you'd like to see, if there's a zero line on the MACD, you'd like to see the signal line breaking this. It might just come up to it and bounce away from it. And these histograms to get a bit taller. This to flatten out, even though it's overbought. So that's still looking quite good on a 1 hour basis. The 4 hour candles are a bit choppier. But again, you can see that 97.75. Remember, that was our first daily target. It happens to be another 4 hour big resistance as well. It's a 200 period resistance for this pair. So, and again, supported by the bottom of the Bollinger Bands and the moving average there, the 50 period moving average. But we've had 4 positive candles for 4 hour traders. So that, if you're not in that already, wait for this candle to close. But it does need to break over here, this 97.75 to the upside. And daily, there's the daily levels. We looked at the 1 hour, didn't we? I don't know what time frame you're trading it on, my friend, but that's the one for CAD yen going forward. So going forward, when you talk about momentum, it needs to break this level, then 98.65, and then 99 to the upside. To the downside, it needs to break below 95.25. This will continue this downtrend, which still seems fairly solid at the moment, even though it's messing about trying to break up to the upside. Okay. Oh, that's answered your question. Right, what time is it? It's 16:35. I need to go and actually, I should send some. Let me just let my colleagues know. I should do some of the US Open, but I'm not going to be able to because I'm live with you guys. So let me just let them know. Just bear with me a second. There's still some more questions coming in. So. Okay, right. Sorry, guys. There's lots of messages coming while I've been waiting. So, excuse me. So, Kiwi. Let's have a look at the Kiwi. Again, another one that's been in the fold this week. It's been obviously the political issues there. Surprisingly, Jacinda Ardern, surprisingly, said she was going to quit, and she did indeed. And the new prime minister there. Was announced. New leader of the Labour Party was announced at the weekend, and therefore the new prime minister is installed. I can't remember his name now off the top of the head. Anyway, as far as traders are concerned, dollar again on the daily basis, this remains bid to the upside. There we go. That's that recovery from these October lows. For the Kiwi, through the blue is the 50, the brown, so that's a positive golden cross here, where the 50 period moving average here on the daily basis crosses over the 200 period moving average. So it's very much aligned. We've got the 20-day moving average, the midline of the Bollinger Band. We've got the 50-day moving average, and the golden line here, which sits right at 62.62. That's our big support now for January. For the Kiwi is where the 200-day moving average sits, and it's below the Bollinger Band now. So the top of the Bollinger Band, see how it's dipped, but it's now moving higher as we've moved to 64.95. So 65, a very high level for Kiwi, is very much in play, and we've tested it. So let me just put that in right on 65. Slash 65. Okay. So as you can see, or I hope you can see, that's it's a strong. It rallied. It stalled at 65 because it's a big round number. It descended, but where did it descend to? Well, it descended to its 200-day. Rallied to the 20 period. Didn't break it, so it bounced off that 20. Finally, a big up day here. On the 6th of January, broke, not greatly, but broke over the 20-day moving average, and it's rallied from there ever since. So this remains long. Resistance, big round psychological number at 65. I don't know, again, what time frame you're trading it. You haven't told me, but that's the daily bias to the upside, 65 being the big support. And the other, I'll put this other thick blue line. So support is the 63, what's that, 63.85, where the 20, the midpoint of the Bollinger Band is. So that's the resistance. That's the support. It's biased to the upside still. The 4-hour, there's the channel we've just put on the daily time frame. So the support on the daily is above the 200 period moving average on the 4-hour. So that's a big sort of support area down here for most of January as we've angled and biased to the upside. 1-hour traders, lots of sideways action. Big spike to the upside on the release of the data. Couldn't hold it, and it's gone back down. Interestingly, big spike. Actually, no, it's what the one I'm talking about. Big spike down on the release of data. It was that hour, not the previous one. So that was the 3:30 spike that took us to the day low for the Kiwi at 64.66. So I'm guessing you're trading this intraday, Lorca. Sorry, I've got the wrong. Yeah, sorry, I've got. Sorry, I'm getting a bit tired. That's all. So yeah, so it's still, so it's a bit of a. You can see it's sloppy, it's messy, sort of chopping around sideways. But it's, you know, it's had a big rally earlier. What's that? This is the 1 hour in the week. So there's that 65 level. It doesn't want to break over it, does it? But it's still sort of biased to the upside. It's really not doing much today, to be honest. Although the support, the immediate support, is at 64.85, and then the bottom of the Bollinger Band. Sorry. So today, if you're in this now, the support is there at 64.85. The bottom of the Bollinger Band is 64.75. Now the noise of the news is out, but it doesn't also want to break over 65. So it's biased to the upside, but not a great deal is happening, to be honest. So it looks like it's rejecting 65 here yesterday, or earlier in the week. It did get over 65, .65 I should say, but didn't want to hold it, came back down, up, didn't want to hold it, didn't break it yesterday, and has only broke it sort of on a short time basis today. Okay. Nasdaq, a couple of you asking about Nasdaq. Setu, the same guy. Setu, what should I do about Nasdaq? Nasdaq, as you obviously weren't here earlier, Setu, we are biased to the upside. We've broken this 11,900 level. Big down day yesterday on open, then recovered for the rest of the day, the Nasdaq. So this 11,900 level, which was resistance from yesterday and Tuesday, and the high we ran to on Monday, following a positive day on Friday, having gone down Wednesday, Thursday, is positive. So we're over 11,900 on an intraday basis. The cash market is open. I can't see where we are, but no doubt some big moves on things like Tesla and other companies today. If I look at my market watch, we look at some of the biggest movers today. Tesla must be up there somewhere, I guess. There we go. So Tesla's up 10% at the moment on our markets. So these are the big moves. Tesla, the physical stock, Tesla, the CFD is also up 10%. So big move. 3i as well. Evotech, Interim Capital. So some big moves. STM Micro also had their their earnings report today. They're up 6%. Snap 6.4%. Some big bounces. GDS Holdings, the key Chinese trader, 5.5%. So some big movers on open today. Banco Sabadell, the bank from Brazil, 12.2% to the upside. So some big movers today on the US markets. As far as losers are concerned, some smaller pharmaceutical companies, so it's a technology company, Sherwin-Williams, paint company, Xerox, the old copy company, off 6%. Diageo off 4.7%. They had really good earnings this morning, Diageo, but their shares are down. Disappointing outlook. IBM also had some good earnings, 3.4% to the downside. Southwest Airlines, 3.5% to the downside. Anyway, what were we talking about? We were asking about the Nasdaq. So yeah, tech stocks. So the Nasdaq up to the upside. If we look at the daily time frame, you see what a big rally we've had. So the rally for the Nasdaq is the best of it tends to be the best or the worst Nasdaq on a daily basis. So this low down here at 10,700 at the beginning of January, we've rallied some 12% to the 200-day moving average, and that's the key thing. It's banged into the 200-day moving average, and it can't break over it so far. So 11,900 was the psychological level, and that comes down to meet now the 200-day EMA, which we're right at now at 11,950. Signal line is positive for January as we've rallied Is this going to hold? Who knows? RSI has been positive for January as well, as you might expect, at 64 and still rising. Will there be some profit taken before the end of the month? Probably. When will it happen? Who knows? But the trend remains to the upside. The positive candles here for January, the big ones, the black ones, the big black ones, are as big as the negative ones were for December. We had a big positive. Having said that, we had a big positive November, didn't we? Hugely positive November, but it all sort of fizzled away towards the end of the year, and we were down 30% for the Nasdaq for 2022. I mean, that's unheard of in the last 10 years, but these things happen. So we've bounced, understandably, for January. When I say that, look, if we go to the monthly chart, I'm not sure this will go back far enough. What a rally we had for 2020, 2021. We had a shakeout, decisive shakeout for 2022, and we've bounced in the first month of 2023. Sorry, 2022 we were down. But, as far as this is concerned, it's not really breaking much. So they're the two big lines there at 11,900 and 10,700 up there on that monthly time frame. So obviously you're not trading that. Setu. What should I do on the Nasdaq? Well, on an intraday basis, it's bullish. It's over that 11,900 level. It's continuing to move higher. 30 minutes also bullish out of the Bollinger Band. So be careful. It might come back down. RSI is 76 and oversold. But again, it's been on the time frame. 4 hour. Last candle broke that key 11,900 level. So many would have got in there. Many would have got in here. Or for 4 hour traders, when was that? That was last night into close, interestingly. The 20 hours to 12 hours. So that's a positive close, having shook down earlier in the day. So that's positive. Daily remains positive, but stuck right on this 200 day. So a really, really key level for the Nasdaq. So many will have taken some profit off the table as it's got to this 200 period moving average, undoubtedly. As happened here at the 50s, it rotated down, but there was more buyers, took us up to the tech. And again, depending on what happens, because obviously next week takes us into February, so there's an end of month wrap up, and the big companies report into the end of, as we saw earlier, end of January, beginning of February, 2nd of February. So we'll see where we go from here. So that's absolutely key where we are at the moment. I hope that's actually helped, Setu. Good afternoon. Gold. Gold remains a bid. This is the daily. We talked about this earlier. Let's make the charts a wee bit bigger. So 1950 is the big line in the sand. We couldn't get over. 4 hour traders. There's the 19. In fact, 1940 or 1949 we can get to. But 1950, but small psychology. The 4 hours come back to test the 20 period moving average. So we're right on support for 4 hour traders at 1933. Next support, if you're a 4 hour trader, is the low here at 1922, which I've got on many of my daily time frames, which happens to be the 50 period moving average as well. And the bottom of the Bollinger Band's around about there as well. So 1922, 1920 is support for 4 hour traders. 1 hour traders, we were long into close yesterday. It didn't want to move high. It triggered short this afternoon or this morning at 12 o'clock, but it doesn't want to go under the, or didn't want to go under the 50 hour. Bit of a retrace. Depends where you got your stop loss now. It should have been sort of up there. Ideally up there, but you pulled it down now, round about there. You might have got stopped out on that spike of the data, but we are now moving lower at 1931. Gold traders. Next support, if this continues to move down, is the 200 period, which is sort of around about yesterday's low, around about $19.23. But interestingly, the low from Monday, the low from Tuesday, and the low from Wednesday were all higher, so it's still trying to get higher, because the high for Wednesday, the high for Tuesday was above the high for Monday, the high for Wednesday was above the high for Tuesday, and the high for Wednesday was above the high for Tuesday, and the high for Thursday was above the high for Wednesday. So we're still tracking higher on a daily basis. But intraday, it's rolled over. Whether we move all the way down to 1923 we'll see. We currently trade at 1932. Mohammed, I don't know what time frame you want to trade that, but as I say, the shorter the time frame, the more short it will be. There's the 30-minute. That went short at 8:30. And then it went short again as it broke under the 50 period moving average at 11 o'clock, and it's continued to move down. And that might have stopped you out there if you've got bored with it doing that. But wait for the data. And now it's under its 200 period moving average, so it's moving lower. So dollar is in perhaps a lift here. Gold certainly on the bid. Something says thank you. That's not a problem. I'm going to wrap this up, guys. There's only a few more questions left. I am going to wrap this up because I'm getting a bit tired now, if you don't mind. Mohammed, cable. Let's have a look. Pound, dollar. As you said earlier, it remains bid. It needs to get over 124. Intraday, Mohammed, it's not doing very much. It's a bit messy. It's been sort of messing about. It's the 21.24. I mean, that was a relatively strong candle from earlier at 10 o'clock this morning, trying to give it some direction to the downside. Didn't break the 20-hour moving average. It did the follow hour, but it hasn't been back over. So it's biased now to the downside. Lots of intra-hour volatility, though, so be careful on that one. That was the spike to 123.60 when the US data came out for the 3 o'clock candle. We've tried to rally higher to 124.20 during this current hour, which is just about to finish as well. But we're biasing down to the downside. So 124 has been really rejected today by the looks of things. And we're edging lower by the looks of things, but it's difficult to tell and see. So if we are going to move lower, next support will come in at 123.53, where the 50-hour sits, and then below that is the 200-hour, which sits at 123.30. So there you have two downside targets. If we do break 124 again, you'd like to see it first break to the up. I don't know how long you're going to trade this for, but for the rest of the day, that is. We would want to break 124.10, which is the top of the end of our candles, which you haven't been over, have we, yet today? And then these intra-hour spikes, which is unlikely given that all the data for the US and the UK is out already today. So it looks like we're going to close under 124 today, although you can never tell. But that's what that looks like to me. Mohammed, Amula, thanks for your time and admin. That's absolutely no problem. Admin, that's what you're for. Nagulu, thank you, sir. It's clear, I believe, CAD yen will push more high to the last resistance. Indeed, that's looking quite good. Again, it's biased. Something will that they've said we'll see if it pushes high because the Bank of Canada are pausing. They're not going to push the CAD, so the CAD's under pressure. Yen's had a weak day today, but the yen and the Bank of Canada and the Bank of Japan looks like they're going to have to do something, not immediately. That's obviously been ruled out until probably the new Bank of Japan governor comes in after Kuroda has retired in April. It's also the beginning of the end of March. April marks the beginning of the new corporate year for Japan as well. Lots of flows on the yen around about that time. So could watch that into for the next few weeks and months. But immediate, short term, yen, I say it's had some weakness. So has the CAD for that matter. But we'll see where it goes. We talked about that earlier, didn't we? As I was just joining, thank you for the live stream. I was just joining Bayo. Sorry, I just running out of steam, Bayo. We started at an hour or so ago. In fact, an hour and a half ago, and I have completely run out of steam. So. Take care, everyone. Trade carefully. I'll leave you with everyone, well, not everyone's favourite, but most people's favourite, the euro. So we're back under 109. The dollar's gaining from the data today. Didn't immediately, but we're sort of edging lower. But if we look at the daily time frame, it's a down day in a big, strong uptrend. And as far as the dollar index is concerned, we've simply bounced off lows of the week today, down here at 101.25. We've bounced off those lows and we're edging higher, but we're still below 102. And again, if we ever get rid of that trend line, it's a bit If we look at the daily time frame for dollar index, remember dollar index is a weighted index of 6 key US crosses, including the ones you probably think of, and Swedish crown. So the trend remains to the downside, although we're having an update today. It's the first update really for dollar index in a long time, isn't it? 1, 2, 3, 4, 5, 6, 7, 8 days, 10 days. And even those weren't great days, were they? And we were forming new lows. So we have got a new low again at 101.27, 101.25. It's not looking great. So we're moving lower. So I'll leave you with that. Amina, thank you very much. You're the Amina. I think you're from the Caribbean, aren't you, Amina, if I remember rightly? Or it might be a different one. I don't know. Yeah, dollar still remains at this new or just above, really. I mean, on a daily basis, looks like it's done quite well, doesn't it? Relatively has. But really, we're down at 8 and 9 month lows for the dollar, whereas, gold, where's gold? There we are. Gold is, at 9 month highs at this 1950 level or 1949 as we come down. And again, that's having a down day today, but it still remains bid on an end of day basis. So whatever time frame you trade, whatever asset it is that you trade carefully, take care, stay safe. And may the pips be with you always. And remember, it's all about risk management. It's all about keeping your losses small and not over trading, and being sensible with your capital and what you do. So all the very best, everyone. Take care. We'll see you all again soon. Take care and be safe.